Well, we do want to stay on this oil theme. It's actually going to be a separate real deal because we just want to bring you some stats. I mean, it was down 46% last year. You brought this up. What's the right price for oil for the U.S. economy?
In Texas, we'd love to see it at about $200 a barrel.
Now, you do know that Texas is part of the U.S., right?
Despite attempts.
I know.
I think 80 is probably a great number for Texas. And even 70, a lot of people can still make money in it. And when we start wondering if we're going to get to 40, that's really where the concern comes.
I'll take 2 barrels for 80, or 40, as you just highlighted. But no, I actually do think low prices will help stabilize oil, because at a certain point, it becomes uneconomical, as you commented on, to drill. And you're better off leaving it in the ground, and I think that will actually curb. I hope.
But I like what you said too about Russia. I read a blog post which said Putin basically fired his whole economic team, who told him, "Listen, you cannot price oil at $100 a barrel. You can't do your GDP estimations on that." And he said, "Okay, you're fired."
I guess it's don't disagree.
But this is a simple supply and demand. If you think about it, I mean, supply is increasing. We came out today. Iraq, Russia, highest amount of output in over 3 decades. U.S. highest output in over 3 years. So when supply is going like this, and then you have the demand numbers coming out, you have the China number coming out, getting worse, the Eurozone number getting worse, the factory numbers. I mean, that's pretty simple. Supply is going up, demand's going to be dropping. Where do prices go? Prices have to go down with that. And I think Jim mentioned this earlier. Until prices get to a certain level where you stop the supply and supply decreases, and even if demand stays the same, then prices can go back up.
Okay, but one bizarre thing, and I think it's just because we've seen such a big move in oil, but today I looked at the weakest part of the market, consumer discretionary.
Yes.
But I mean, it's also because oil has been beaten down 46%, so we are now used to this idea of lower oil.
Yeah, I mean, I can't say that it's all that surprising. Again, from a cycle perspective, you look at where the spending has been. I think that the spending in consumer discretionary was strong during the Christmas season and during the holiday season, but it doesn't translate necessarily in terms of stock price, because it is a forward-looking mechanism. So as we look ahead 6 months into it, as the markets typically do, they see those, danger zones, and they're being a little cautious. And consumer discretionary and some of the higher beta funds out there are going to be more susceptible to pullbacks as a result.
Well, retail was down big today, too, one of the leading sectors in a way down. I think it was just simple profit-taking. I mean, a lot of those sectors did really well running into it. I've been saying for weeks, I own a lot of retailers, Macy's, some of the retailing ETFs. I'll probably be selling in the next couple of weeks, because typically you see this run-up, and then when the numbers start coming out, if they don't exceed expectations, which were pretty darn high, we could see a nice profit-taking in that sector.
All right.